describes it as peer-to-peer cash. And money has multiple purposes. One purpose of money would be store of value. Another one would be a medium of exchange, which is more like peer-to-peer cash. You're right. I think it's fair to say at this point that Bitcoin has succeeded as a store of value, and I don't think it has become a medium of exchange. There's people who have tried to make that happen with the Lightning Network was a optimization layer on top of Bitcoin, but it never really took off. It turns out that when you have a deflationary asset like Bitcoin, that people think it'll go up in value over time. I mean, it's volatile. It's volatile, that's one issue for a medium of exchange, but the other one is people think it's going to be worth more in the future, so they don't really want to spend it right now. So we've actually seen massive growth of stablecoins running on blockchains, fiat-backed stablecoins, as the medium of exchange, and Bitcoin has remained the store of value as digital gold. So the way I think of it is we're almost like creating this new financial system, and it has to. It's not a perfect match to the prior one, but it rhymes, right? Like in the prior system we had gold, here we have Bitcoin. In the prior system we had, I don't know, Visa and Swift, and and here we have stablecoin payments happening on chain. So yeah, and then there's lending is being recreated, and insurance, and capital formation with stocks. It's like everything is being recreated on chain.
I used to watch these debates. I don't remember how many years ago, but Michael Saylor, MicroStrategy. I think he put a lot of money in Bitcoins, and he would argue gold versus Bitcoin, overall market cap, what will happen tomorrow.
Yeah.
Do you agree with him? For a public company to he somehow converted a public company into a fund which gives you exposure in a more tax efficient way into the upside of Bitcoins.
Right. Well, okay, so he did something really brilliant, which is, I think from a financial engineering point of view, it was brilliant, which is that a lot of different pools of capital in the world, they're able to buy public company stocks, but they were not able to buy Bitcoin. You might be aware that recently there have become Bitcoin ETFs as well, which have become very popular. I think they were like the fastest growing ETFs of the last few years. But Michael Saylor recognized that a lot of funds could just very easily buy a public company stock if they could not buy an ETF or Bitcoin directly. So he happened to make a public company that just was essentially 100% exposure to Bitcoin, and that created a lot of demand for that. And then he's using leverage in creative ways and things that I'm not entirely familiar with, but yeah, I mean, I think we just need to make it easier for people to get access to digital assets, and there'll be various opportunities like that along the way.
Do you want to move on to